Ladies and gentlemen, good day and welcome to the Q4 and FY'24 earnings conference call of E2E Networks Limited, hosted by Veluram Advisors. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Ms. Purvangi Jain from Veluram Advisors. Thank you and over to you, ma'am.
Good afternoon, everyone, and a warm welcome to you all. My name is Purvangi Jain from Veluram Advisors. We represent the investor relations of E2E Networks Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings call for the fourth quarter and the financial year ending 2024. Before we begin, a quick cautionary statement. Some of the statements made in today's Concall may be forward-looking in nature. Such forward-looking statements are subject to risk and uncertainties, which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings conference call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now I'd like to introduce you to the management participating with us in today's earnings call and hand it over to them for their opening remarks. We have with us Mr. Tarun Dua, Chairman and Managing Director, and Mrs. Megha Raheja, Chief Financial Officer. I now request Mr. Tarun Dua to start with his opening remarks. Thank you and over to you, sir.
Thank you, Purvangi, and good afternoon, everyone. Welcome to our earnings call for the fourth quarter of the financial year ending 2024. Welcome to our earnings conference call for the last quarter of the financial year 23-24. Before we begin with the performance for the fourth quarter and the financial year 2024, let me give you a very brief introduction about the company for some of you here who might be new to the company. E2E Networks was founded in 2009 and is amongst the one of the largest public cloud players in the cloud GPU market in India today. So we have been providing cloud services since 2009 to various startups and businesses. And our primary focus is on workloads of artificial intelligence, machine learning, and for application welfare enterprise customers, running ERPs and CRM solutions. And we operate within the framework of infrastructure as a service delivery model on cloud computing, which primarily consists of the workload management for CPU, GPU, storage solutions, containerization, virtual firewalls, a lot of cloud native services like queue services, load balancing services, and more recently, the underlying infrastructure for artificial intelligence for training and inference and deployment of model endpoints. So we listed on NSE Emerge in 2018, and more recently we transitioned over to the main board of NSE. We, over the course of our evolution, we have significantly expanded our customer base, and currently we service nearly 3,000 active customers. We have our major facilities operating out of Noida and Mumbai, where we use the underlying third-party data centers. A more comprehensive list of product offerings and solutions of our cloud platform are accessible on our self-service platform at myaccount.e2enetworks.com. So in the current world, we have increasingly seen that we the artificial intelligence, machine learning, and generative AI domains are the major new workloads, which are kind of like almost 4x to 5x the typical size of CPU workload. And increasingly, like what we are seeing is that like there is going to be like a major shift of most of the workloads towards like centered around cloud GPU rather than the traditional CPU bound workloads. So what we have seen is that like this presents a very substantial opportunity for us to kind of like start working at par with our competition, because currently everyone is trying to build at the same time and figure out like what would be the path forward for the enterprises and for the entire set of organizations to how to adopt the cloud GPU, and multiple approaches, including that of like people working with hyperscalers, people working with cloud GPU platforms like us, which provides like a lot of like underlying software infrastructure are being used. So like we have seen like as a national imperative also from the announcements that like the government has made regarding artificial intelligence and the support that the government is providing, that one, of course, that the data center capacity required for artificial intelligence is going to kind of like exponentially grow over like next 5 years or so. And that data center capacity is going to be utilized majorly by AI/ML workloads. Now, we feel that like having been in this field since 2019-20 onward, like we have like a edge in terms of like our software and solutioning capabilities for AI, machine learning, and generative AI workloads. And we have historically been providing very high value compared to the pricing we charge, and very, very centered on the delivering the value to our customers. So, so today, primarily what we see is that like we are very, very focused once more on the startup ecosystem, where the new age AI, ML, and generative AI startups are increasingly working on solving problems using cloud GPU. And then basically like we also see like a lot of demand from higher education and research, apart from the traditional workloads that we continue to help the SME companies with. So, and like in the near future, obviously our goal is to kind of like expand this universe to include the workloads coming in from larger enterprises as well. Now, we have been very competitive on our pricing compared to the value we provide through our software and services. And this continues to remain very, very attractive to our customer base. Now, we feel that like we'll continue to be able to grow at a higher than industry average growth rate over the next couple of years. And so it's been a long while since we have transitioned over to the self-service model, and the percentage of customers being served from our self-service public cloud platform, where we provide like a lot of software support, which is very, very similar to what the hyperscaler cloud platforms do, continues to serve us well. And in the future, like with a very generous dosage of the software being built, targeted at the data scientists and the AI/ML researchers and the Gen AI companies, will continue to expand our offering and our software to help people utilize the workloads on our infrastructure as a service platform. So during the last quarter of the financial year 24, we have made very rapid progress on many new features and services, and will continue to release those newer features on our AI/ML platform called Teal. which is a workload environment for the AI/ML workloads, where we take care of like the ability to do all four major things. So the training, the inference, the model endpoint deployment, and the ability to build data pipelines in a scalable fashion. And we continue to add additional scalability features over there. And so we have also kind of like integrated Tier better with our infrastructure services platform. So you have the ability today to launch raw operating system environments using containers on top of the Tier platform. That allows you to kind of like have a very similar platform to what people are used to on the My Account itself. And it's very, very seamlessly integrated with all the software features for using AI/ML. So we are additionally working on compliance and security features and monitoring features for our entire platform. And we continue to innovate on storage technology for our infrastructure services platform. And broadly, we are very confident of keeping up with the industry needs in terms of various verticals. And we are very happy to note that like we are being recognized as a AI-first cloud GPU infrastructure platform in India with technical capabilities which are at par with the very best. So now I would like to hand over the call to our CFO Megha to briefly talk about some of the financial and operational highlights of the quarter under review. Over to you, Megha.
Thank you, Tarun, and good afternoon, everyone. Let me first start by giving you some of the key financial highlights. I will summarize the performance for Q4. For Q4 FY'24, the revenue from operations stood at around INR 29 CR, which witnessed a growth of 67% on year-on-year basis. EBITDA for the quarter is around 15 CR, which witnessed astounding growth of 68% on year-on-year basis, and net profit was reported at 4 CR with a growth of 39% on year-on-year basis. Coming to financial year ended 2024, revenue from operations stood at INR 95 CR, representing a growth of around 43% year-on-year basis. EBITDA is 48 CR, representing a growth of 45% on year-on-year basis, and a net profit of 22 CR, which witnessed a growth of around 121% on year-on-year basis. That concludes the update for quarter, and we can now open the floor for question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Parikshit Kabra from Pictet Advisors LLP. Please go ahead.
Hi, congratulations on a great set of results, and thanks for the chance. I just wanted to understand, how do you think this will play out as the competition in this space increases? We know that Yota has already entered the space and has managed to create a relationship with NVIDIA as well, where they're getting the chips. So my question is, this has two parts. One is, how does your relationship with NVIDIA exactly work, and how do you make sure that you continue to get the access to the chips? And number two is, how do you think you'll be able to manage to keep your right to win as the number of players in this space increase?
Okay, so the first part part about like whether people will get access to the chips, I think like what we saw last 18 months of the kind of shortage of chips, those are like the kind of events that happen like once in a while. Now, there was obviously like 10x growth in the overall cloud GPU consumption and the GPU consumption globally. So that obviously resulted in like short-term shortages. Now, like once that shortage is there, once that demand is clarified, then obviously the foundries and the entire ecosystem that is at the back end of the major chip makers gears towards the new demand, and that takes a couple of quarters, which has already happened. So we don't feel that in the future there is going to be that sort of shortage, and you will need like very, very special relationship to kind of like move ahead of the queue. Now, that being said, like we continue to enjoy a very good working relationship with all our backend vendors, including NVIDIA. And the way we work is that basically like we bring our backend vendors into the conversation with our customers whom we are talking to and helping them with their workloads. And it is to kind of like help validate any solutions that we are building for our customers. So now that relationship continues as is, and that relationship will continue in the future as well. Now, regarding like heavy competition, like I wouldn't like want to comment on any individual competitors, but for the past 15 years as a business, as a company, we have operated in what is called a red ocean. So, like, we have never shied away from competition. Like, we continue to build up our portfolio of software and services and solutions with a view to develop a better understanding of the workloads that our customers are bringing to us. And that insight into the workloads, that ability to understand the needs of the workloads and implementing those in the software, that product differentiation is what creates the long-term value for our customers, and we'll continue to do that. So as you continue to get the adoption on your software and you keep getting the feedback from the customers, you keep building based on that. And that creates the long-term value and differentiation for any business in software and cloud industry, and we'll continue to do that.
So just a follow-up on that. First of all, thank you for a detailed answer, Tarun. But as a follow-up on the part with the chip shortages, so your opinion is that in the next couple of quarters, the queue for getting these GPUs will no longer be a concern. The supply constraint will be gone in a couple of quarters? Because I got a sense that this will be...
There is always going to be some queue, but it's not going to be the longish queue that we have seen in the past of that, like, okay, like, we are looking at 52 weeks, 56 weeks, 60 weeks, and so on. That's not going to be the future.
Got it. And within this queue...
a normal queue, and mostly because kind of like overall, like that's the nature of the integration required to deliver the chip in a form that can be utilized by cloud operators. So nobody buys like raw GPUs anymore. Like they're always packaged in the form of like HGX servers or other server formats that are coming up. So the entire integration takes time. So, and like people have to understand the entire solution before they can implement it. So that is the part that takes time. So I don't think like it is, so all the moving parts have to be in sync for the solution to be built for you and then deployed at your location. So all of that part takes time, but like I don't think like there is going to be a long waiting queue like in the future as well.
Got it. So, but we don't have a formal priority relationship with NVIDIA and other vendors. It's an informal network as such. Is that a fair statement then?
Like if you go and search on the websites of the major vendors, like we are obviously listed as a cloud service provider partner. So, and from the perspective of like all the support that we have demanded and got, like I feel that like it's a prime relationship without putting any additional formal requirements to it. Like it continues to be a great relationship.
Great. I have many more questions, but I get back in the queue. Thank you so much.
Sure. Thank you.
Thank you. The next question is from the line of Ayush Bansal from MK Global. Please go ahead.
Hello.
Yeah. Hi. Please go ahead.
Thank you for the opportunity. Looking at the numbers, there's a 185 crore capex in FY'24, which was 35 crore last year. So, what is the revenue potential for this capex, and is this reflected in the MRM as of now?
Yeah, so some part of the MRR reflects this capex, obviously, and what we believe is that, like, of course, like the capex kind of like reflects into MRR in number of different SKUs, and each SKU obviously based on the amount of value added software, the nature of the length of the contract, and so on. So depending on many factors like that, MRR realization is differentiated. But regardless of that, based on our current understanding, we believe that like the MRR potential with the current capex that we have already done would be of the order of anywhere between like 14 to 16 crores from the current MRR number, like we should be able to achieve over like next couple of quarters.
Okay, got it. And is there any further plan for capex during FY'25?
It's a continuous process. Like, so as we continue to project the demand coming in from our customers, we continuously make the expense on capex. So there is no capex done and dusted ever in our cloud industry. So we are always buying.
Okay, and can you help us quantify that number if you have anything in mind?
In an ideal world, like we would like to spend another $100 million or about 800 crores over the next 12 months.
Mm-hmm. Okay, and how do you see that to be funded?
So it will have to be like a combination of things, including like financing from banks and leasing partners and vendor financing and some equity raise.
Sure. Thank you. That's helpful.
Thank you. The next question is from the line of Abhishek from ABC Capital. Please go ahead.
Hi, hello. Can you hear me?
Yeah. Yes, hi, Abhishek. Please go ahead.
Yeah. In the November Concall, you had guided for a growth of 40 to 50% top line. So can we guess that next year the revenue will be around 140 crores and you had given that margin will be around 30%. So we can guess that the bottom line will be around 40 crores. Is it correct?
See, like I leave that part typically to analysts. Like we do our best. So like obviously we kind of like have some sense of projected demand and we have some sense of like how much capacity we need to put up. Now that conversion happening over predictability of that conversion, like we cannot promise that. But obviously we try our best to kind of like convert the capacity we have to revenue as soon as possible.
Okay. Thank you. Just one more question. Can we consider that since you are providing the background support for all the software which these startups are doing, so we can consider E2E networks like a proxy for all the new age computer-based startups, like new age startups that are coming up? Can we consider like that? Is it like that? As the startups grow, we can think that our revenues and company also will grow. Can you think like that?
Sorry, I didn't really understand the question. So, the overall, if your question is that, overall, if the AI, ML, Gen AI business grows, then are you going to see a lot of growth because that will generate a lot of Gen AI startups? The short answer to that is yes. Obviously, there are no answers to basically what those startups are doing and what are their workload requirements and how many of them are coming to us and so on. But broadly, from a perspective of where the market seems to be going, in general, if you are seeing a lot more AI ML adoption overall, both in the industry as well as in the startups as well as in the higher education and research, then yes, that growth is in a sense a proxy for our growth as well.
Thank you.
Thank you.
That's all from me.
The next question is from the line of Pankaj Shah from Tenor Wealth. Please go ahead.
Yeah, hi. Thank you for the opportunity. So wanted to understand this, since the demand is so high for the AI and ML workloads, how quickly can we deploy this CAPEX, this 150 crore CAPEX which we have done?
So the CAPEX done is already, but in the sense that deployed on our cloud platform. How quickly can we sell is something that we do not make a statement on. That is something we like to look in the past, once we have done it. So that's the way we wish to operate.
Yeah, so in past, I think you used to guide that over a quarter or 2 quarters, we used to sell the capacity. But the question is if the demand is so high, do we see that change?
That is always the guidance we give. There is obviously a cycle to kind of selling to the cloud customers. So where obviously you continue to stay in touch with the entire ecosystem, continue to work with people on POCs, continue to kind of guide them on how best to optimize their workloads on our cloud platform. So that is the typical explanation of the cycle of a quarter or 2. But obviously having a shorter period or having a longer period is always possible. So you can't predict the future for yes, long-term future you can predict that yes, over the next 5 to 10 years we are going to see explosive growth in the AI ML field. But can you predict a quarter on quarter or say that next 2 quarters what is going to happen? That is something which is very, very hard to predict at any given point of time.
Right. So the question was not from a quarter-on-quarter perspective. It was just that if the demand is high, then are we seeing the changes in the deployment?
From a perspective, the demand is only going to increase as the industry shifts to more cloud GPU-centric workloads. So that demand is only going to increase in the industry. And obviously, it is not possible to predict, what's going to happen in, say, next 1 quarter or next 1 year. But it is possible to kind of make a view over a medium term or long term of 5 to 10 years and say that, yes, this is the broad industry trend which the entire industry seems to agree on.
Okay, got it. And sir, how should one look at the asset turn? So earlier we used to guide, say, 0.7x over a year. So does this increase with time, or how should we look at?
See, it's very, very difficult to kind of see, these are all averages in the sense that the asset turn also relies on a number of things, the period for which the customers are using the services. So when there is more scarcity in the market, people want longer contract periods. When there are less scarcity, then obviously people want shorter periods. But doesn't mean that they are going away tomorrow, day after, or next month. But they also tend to end up paying a certain percentage more for shorter periods. Now, that being said, there is also the nature of SKUs. So for the same underlying hardware assets, there are a number of ways in which the assets get monetized due to the nature of the software capabilities as well. So over there, for each different SKU, the asset turns could vary from all the way from 0.5 to even So what the final blend we are able to achieve, is again something we can look back into the past and say that, okay, this was what was achieved. But there is a lower bound for that, which we can predict, which is somewhere anywhere between, say, 0.55 to 0.6, but that's the lower bound. But on the other hand, there is no upper bound in a software-driven cloud, where what sort of capability you can bring to the table to achieve an asset turn. So broadly, if you ask me, that is not how we look at our business. We look at our business as a technology business, very focused on figuring out the various industry solutions. And over there, eventually, the asset turn doesn't matter because it's very, very capability and technology and software-driven business. And it's not about being the cheapest on the market. It's about creating enough value for the customers.
Okay, got it. And sir, if I got this correct, you said 800 crore capex plan for FY'25, right?
Ideally, in an ideal world, I believe that that might be something we might want to do.
Right. Okay, great. And a few on the bookkeeping side, the line item which says the purchase of consumables and services, what exactly is this item?
See, primarily, the major expenses that we have are on the data center side. As you are aware that we use third-party data centers. So the major amount of services purchased are related to data center services that we purchase.
So is that power or anything else?
So it's all a combination of power, space, bandwidth, and certain other smaller items. So which are a part of this.
Okay.
And of course, some level of software purchase is also there. So some of it intended for the customers where there is a direct one-to-one relationship between services purchased and services delivered to the customers. The examples of that would be the licenses, software licenses that we deliver to our customers. And then there are obviously certain other services that we also procure in the normal course of running a business.
Right. So what I was trying to understand is majorly we should look this expense as a fixed or more of a variable.
So the services would be in the same proportion as the revenue, in a way that they will increase with the revenue in a certain incremental percentage fashion. Now again, it's a question of there is a broad number that is there, and broadly that percentage will as the volume increases, go down slowly.
Okay. Sir, what exactly goes into the other expense? Because I'm sure the lease rentals are being calculated below the EBITDA with Ind AS 116. It majorly flows through depreciation and interest. So what exactly does that?
Let me ask you to repeat the question. Let's get Megha to answer some very specific finance questions you're asking me. Because, sorry, I come from an engineering background, now completely into the business part. But I'll let Megha answer your question. If you can repeat your question once.
Sure. So one thing on the balance sheet side, the right to use asset which we have created, I assume that's mainly on the data center lease visibility which we have. And if I come on the P&L side, the lease expenses will be covered mainly through depreciation and interest. So what exactly are other expenses, if I am understanding this correct?
Sure. So in other expenses, we have payment gateway charges, then membership, subscription, legal, professional, these type of expenses, and advertising and sales promotion, means marketing expenses.
Okay. And this right to use is mainly for the lease visibility which we have, right? Data center lease. Okay, got it. Thank you so much.
Yeah, lease is separately capitalized as per Ind AS.
Right.
So data centers are not leased. Data centers are rented in a not strictly in the fashion of rent, but data center services, they have their own classification. on the other hand, like leasing relates to the equipment, and this is all lease to own kind of equipment.
Okay, got it. Thank you so much.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants, please limit your questions to 2 per participant. Should you have a follow-up question, we will request you to rejoin the queue. The next question is from the line of Ratan Mehta, an individual investor. Please go ahead.
Hi, Tarun. I've been a customer for many years. My company, I came to know of you guys about 6-7 years ago, and since then, you've given terrific service. And a few years ago, I had the opportunity to invest, so I did. So I have a couple of questions. If you don't mind, I'll just dumb it down for myself, right? Dumb down the business model, which is, let's say we buy a box, okay, and this box is your standard CPU RAM. You take pieces of this box and you rent it out and get more rent in the cost of this box. Then there's this new box, which is a GPU, and you rent this box out again with the same model. You're going to get more money for it. And then there's a third box, which is cloud storage, which is just hard disks, and you get money for that. So does this accurately kind of describe the economics of the business?
Okay. So, in the sense that, where you are saying that, you combine software with the boxes, and ultimately you are selling a box. Is that the definition of the business? I somewhat disagree to that. Ultimately, yes, you are running a workload, but the way to run the workload, how to make it more efficient, that is what the people pay for on the cloud. Otherwise, everyone would be running on-prem and co-locating on their own and managing on their own. So, as the world becomes more complex, a typical cloud operator is doing something like a couple of hundred activities on the side of security, on the side of reliability, on the side of scalability, on the side of being able to, of course, the part about being able to utilize resources on the tap. That's the whole other infrastructure. So, typical number of activities that a cloud operator is doing for you, which you cannot very easily replicate in a business, is numbers around a couple of hundred. Most of these being done in software. Also, a lot of these activities are done as standardized processes that take root over decades of experience from the personnel and codified both into software as well as into the processes for the people, and also for basically what you are demanding from your vendors and so on. So very, very when you say that you're dumbing it down, that's really dumbing it down. That ultimately you're selling a box. So
I appreciate the nuance in that, and
that box is what we are selling. So potentially you could so it's a whole ecosystem that has to be built. So it's not something easy to replicate and say that, okay, let me deploy some software onto a box and I can be an equivalent of an E2E network or one of the competitors who has been around for a couple of years to achieve that.
Thank you so much for really explaining that, and I appreciate it. I didn't mean to simplify over dumb it down, but I really appreciate your clarification. The next question based on this little analogy is, when you're using debt to grow, you're now putting a lot of the debt towards GPUs in the hope that the AI and GPU game is going to be where you make the most amount of money. And the CPU game, you may have reduced I'm not sure about this, but you may have reduced the amount of debt you take to grow in the CPU route. So is that an additional risk to the business? And how will that play out?
Really. So the CPU side also continues to be helped by both the tailwinds. So one is that anyone who is buying a GPU is not necessarily just using the GPU. They are also necessarily buying the other parts of the cloud ecosystem, so which also helps over there. And second, the organic growth of the existing set of customers who are very focused on the CPU workloads, we continue to pay attention and continue to pay complete focus to that and continue to build software features for that. And what our very sincere belief is that like when people are looking at a cloud, they are looking at it holistically. They are not coming in just for the GPU capabilities alone. Now, during a scarcity era, that could have been the case where people are like, okay, like all I need is the GPU cloud. I don't need anything else. But typically for any developer, data scientist, AI, ML scientist, like they require the entire cloud ecosystem and not just the GPU side of things. Now, that being said, that like, yes, the CPU acquisitions do get vast. So for an example, let's say someone like an E2E, let's say we spent, let's say, 200 crores, supposedly all of it into GPU. But I'm assuming that like it would also have like a 10% portion which is actually going towards like storage and CPU side of the cloud as well.
I understand. No, I think my concern only comes from, because obviously you are in the cloud space, the noise around you as the CEO would be everyone around you saying GPU, and the risk in terms of CPU versus GPU it comes down to what noise you've heard. And that might bias you a little way, which is where I'm asking the question from. So my concern is that if 5 years from now, 3 years from now, or 2 years from now, it's discovered that there aren't that many applications in AI, which is a possibility, a lot of this debt then cannot be repaid with revenue because perhaps the GPUs don't pay off that debt. Do you see that future playing out at all, or how have you mitigated that risk?
No, so one is that, like, of course, like we are not like a dumb CPU or dumb GPU rental company. So in the sense that like we continue to be a software-driven business, and what the investment represents is the capacity to service customers. In an ideal world, like we would like to have like unlimited deadlines to kind of like expand the capacity in an unlimited fashion, and not even have to worry about like, okay, like where the money is ideally coming for on the hardware side at all. But that being said, like I don't see there is any risk. The process of going to the GPU is irrevocable. Like the kind of exponential compute being offered by GPU is kind of like really changes the era in which we are operating. So I don't think we are going back to the era of people kind of like investing more than 25-30% on the CPU side, but major investments in the entire IT industry are going to be on the heavier GPU compute side. And there would be like definitely more than like one vendor on the GPU side as well. And there would be multiple aspects. Like, so if you look at all the CPU companies, they are also getting into the GPU game. So that tells us that yes, like CPU is going to continue to be there for a very long time, but the majority of industry focus is going to be solutions which are built on top of the GPU.
Perfect. My last question is, if 20 years down...
Mr. Mehta, I request you to rejoin the queue for your follow-up questions.
Thank you.
Thank you. Participants, please limit your questions to 2 per participant. Should you have a follow-up questions, we will request you to rejoin the queue. The next question is from the line of Kshitij Saraf from Tusk Investments. Please go ahead.
Hi, good afternoon, Tarun. Good afternoon, team. Congratulations on the great results. I have a couple of questions. Firstly, how fluid is the CapEx plan for you? So are you looking to spend it mostly on NVIDIA GPUs, or are you also following developments around Microsoft coming up with its own set of Copilot PCs, and sort of ARM also comes into the picture over there? So just some sense of how you're looking at this whole vendor landscape and adjusting your CapEx or thinking about it.
Sure. So in the short term, like all our GPU investments that I see are definitely all going to NVIDIA. Now, there is obviously no exclusivity as such, like in the sense that like tomorrow if somebody is able to bring more capable chips for any specialized use cases, we would definitely evaluate that independently and like take a call on that at that point of time. So, we are very, very open to kind of be very flexible about like how do we do our capex based on the customer demand. So it's obviously not all going to be made in like one shot. It would be spread over somewhat, and kind of like that's the way we have always operated.
Understood. Helpful. Secondly, on the fundraise, on the equity bit, what are the kind of timelines we are looking at, and are we looking to deploy the entire bit at once the approval comes through?
So yes, the ability to kind of like consume capital for us is not in doubt. Now we are working on it like over like next couple of quarters, I guess.
Okay, great. Thank you. That's all from my side. Congratulations. All the best.
Thank you. The next question is from the line of Ameya Pimpergaonkar, an individual investor. Please go ahead.
Hello, Tarun. Thank you so much for giving an opportunity and very good numbers indeed. Good to have this Concall this time because we didn't do one last time. I just have a couple of questions and some of my questions have already been answered, so I will not repeat those. I just want to take your attention to the recent outage that we experienced at one of your data centers, right? So I just wanted to understand from you, has it caused any kind of impact, let's say in terms of, of course, maybe not be in financial terms, but in terms of customer experience of sorts? Maybe it would be nice if you start also publishing some of your customer experience scores, maybe not this quarter, maybe coming quarter. So this is my first question. I'll come to the second question after this.
Sure. See, related to the outage, I think we have kind of completely and transparently shared the entire timeline and what exactly happened with all our customers. So obviously all the details are basically the primary responsibility we have is towards the customers. Now, what happens in case of a outage that large where there is a complete blackout? So those kind of blackouts, even when we were talking to our vendors, they said we've seen this kind of a blackout once in a decade kind of a thing. So it's not that this happens every day. Of course, there is always a probability of something like this happening, and it does happen to all the major providers at some point or the other, impacting one or more of their facilities. So what happened in the outage was that obviously there was a complete blackout. Now there was at the level of our third-party vendors, there was a miss from their side where they kind of continued to try to power on without waiting for the UPS to be charged fully. Now this created issues for our recovery because some of our equipment failed because of the surging power and going away of the power a couple of times. And we had to kind of throw away some of the equipment damage due to that. And then on the software side, you have to take care of verifying the impact on a per customer basis one by one. Now, typically, if you look at any operations team, the operations teams are kind of there to have the ability to deal with some level of surge. So let's say you have a couple of thousand customers. Typically in a week, maybe 5% or 10% of those customers would come back asking for personalized support, right? And which is definitely done. Now in this type of an outage where the impact runs into a very large percentage of the customer base, obviously your normal support processes do not work. Everyone's phone calls cannot be answered, although text messages and emails can be answered as per the queue. and based on some of the priorities where the customers come in and say that look, this is very critical to my business. Can you prioritize it? Obviously we do the triage and kind of go and solve those customers' problems first. And obviously the goal is to kind of service all our entire customer base uniformly over there. So yes, this was already explained to all the customers, okay, this was a black swan event that happened. And most of our customers were very understanding about it. Some customers had even some other issues which they opened up about that, yes, yes, this was a black swan event for sure, but I have other problems. So that also allowed us to engage with many of those customers and solve many of the other problems as well. And so we have two major facilities now in Noida and Greater Noida. And this happened at the older facility. And our plan over next couple of years is to kind of slowly migrate without disruption all the customers in this facility, and obviously prioritize those customers who are kind of willing to put in the effort today to help them migrate over to our new facility. And we are also going to be putting up a 200 gig link between the two facilities to facilitate that. The new facility is very, very new. So the plan was always to put up a very long, broad link between the two facilities to link them together. But yes, we have prioritized this, and kind of we prioritize solving the problem for all the customers who could be brought up. Now, if that power outage had only happened on the power outage level and kind of so it's a lot of ifs and buts and what could have been done, should have been done, that's all in the past now. But yes, I would like to point out that in case the third-party vendor had trained their processes better, we could have avoided a world of pain for us and for our customers by putting up the power only after the UPS was charged instead of trying to bring it up a couple of times, which damaged some of our equipment. And of course, we had enough equipment on site to be able to kind of continue the operations post replacement for majority of our customers. Yes, we spent a lot of time in verifying for each of our customers whether their services are up, and over next couple of 24, 48 hours, we continue to call our customers and make sure that everyone's services are completely up and running.
Understood. Thank you. That was helpful. And my second question is, Tarun, on...
I request you to rejoin the queue for your follow-up questions.
Let Ameya continue with the second question. He's only, technically he's only asked one question.
Okay, sir.
Thank you so much, Tarun. I appreciate it. I had to ask you this because you are doing a lot of value addition in terms of your software ecosystem as well as at a network level, right? For example, you have TIR framework, you have InfiniBand that you have recently deployed, both 1.6 TB and 3.2 TB, right? Just wanted to, pick your brains. What nature of advantages, let's say this InfiniBand is bringing you compared to the peers? When we talk about embedding a value, when we sell a contract to a customer, what sort of value are you able to bundle in your offerings? Because these small things are, not coming to the front. And I just wanted to understand how you are looking at this. When you go to a customer, what kind of value are you able to attach to these, two things for now that you have? Thank you.
Sure. Thank you, Amey. That's an important question to address. See, in cloud, what we are doing is essentially, like I said, that we are doing hundreds of activities and integrating hundreds of different services based on open source and hardware and the processes for our trained team to be able to train that. Now, it is to what end? So one end is that we are always providing the latest, greatest technology to our customers at all times. So that is always the goal. Now, the second part, you asked specifically about 3.2 Tbps kind of InfiniBand. So the overall idea is that what is different between the old world of the CPU and the storage and the new world of CPU plus GPU plus very high speed parallel file system kind of storage and so on, is that earlier what you were doing was that the nature of your software was dependent on the abstraction that you provided in your data, which was like you were choosing to store the data, which was by its very nature like key value pairs or relational or some sort of structuring of data was required. So your data was going into structured databases, and the software was limited by what you were storing in terms of like the structured data. Now, structured data in any organization is actually only about 5% or maybe even less of the amount of data that any organization produces. All the other 90-95% of the data is actually unstructured data. Now, if you look at the new world of AI, where GPU has almost 100 times the processing capability, now that 100 times that processing capability is actually going to be used for the remaining 95% of the data that does not get captured in structured database format. Now, which means that like earlier you were designing your storage and network and your entire internal bandwidth infrastructure for being able to process like very small amounts of data. Now you actually are building for like being able to handle like 20x, 100x, or maybe even 1,000 times the amount of data in motion to be able to process it on like very fast, high-speed GPU processors. So that's why we are building all the technology around like why do you need a bigger network? Why do you need a 400 gig or 800 gig Ethernet, and why do you need like 3.2 Tbps InfiniBand? Is to address the data in motion at these scales, because these are the scales required for dealing with organizational data which is unstructured. So which is primarily used to be classified into say voice or natural language or LLMs as they are called today in GenAI terms, or video or images. And tomorrow that nature of data is going to become multimodal, and like we may not need to store all of that data, only the weights and biases kind of like generated through that data into vector databases and so on. But yes, like you still need to be able to handle like a lot of data in motion. So for that, like you need to kind of like completely upgrade the way in which you think about technology.
Thank you so much. I'll join in with you. Thank you.
Sure.
Thank you. The next question is from the line of Shashank Rastogi, an individual investor. Please go ahead.
Yeah, hello, sir. Excellent set of numbers. Sir, I have just one query. Is it due to...
Your audio is not clear.
Okay. Can you hear me now?
Yes, sir. Please continue.
Yeah. So, my question is that in the last quarter, your depreciation part increased a lot. Is there any change in your accounting policy? If it's not, can you clarify, please?
No, there is no.
I'll let Megha answer this question, and after this question from your side, we'll take like one more participant question, and then we would end the call. But let's have Megha's answer to your question, and then we'll take one more question, and then we'll end the call.
So there is no change in accounting policy as regards depreciation. The depreciation was changed from April 2000, from April 23, where we had changed from WDB to state line method in line with the Companies Act.
Okay.
That answers your question?
Yeah. Fine.
Thank you. The next question is from the line of Parikshit Kabra from Picada Advisors LLP. Please go ahead.
Hi. Thank you for the follow-up question. I have two questions. First is to understand the kind of customer profiles that we have. I know you mentioned that startups are our focus area, but are we also seeing that as the operations of our customer scale, they migrate to quote-unquote the bigger players like AWS and Azure for stability or security reasons, or are we not seeing that pattern as of now?
Okay, so like the nature of our customers, like primarily is the like four different buckets today. So one is of course like we have the SME segment, which continues to be our mainstay, the bulk of our customers. Then we have the higher education and research category. Then we are back with a bang with working with a lot of startups today. And fourthly, we also work with like a lot of like partner ecosystem, both in India and outside India. And they also bring in like a lot of customers. And to answer your question about like, okay, like do customers migrate? Like I don't think there is any imperative to migrate today as such amongst the customers from anywhere to anywhere. So the nature of workloads has become multi-cloud. So which means that like in a single organization, multiple clouds is a given. So nobody is trying to consolidate into like a single cloud platform anymore. So there is no imperative to migrate the workloads. So wherever the workloads are running most efficiently by any team who is running the workloads, they usually continue to run over there.
Got it. And my second question is...
sorry to interrupt, Mr. Parikshit. I request you to rejoin the queue.
It's my second question, if I can get that in.
Sorry.
Yeah, please go ahead, Mr. Parikshit.
Yeah, thank you. So I was just trying to understand what is the split of our revenue from foreign customers right now, and how are we? What is the GTM for that?
I don't think we are doing the formal split right now. Like, but currently, like our focus continues to be in India. Although we would obviously not refuse any customers coming from outside as well. So from a focus outside India perspective, like majorly we are focused on the EMEA market and the US market. And hopefully we'll start focusing on the Southeast Asian market as well. But the bulk of our revenues continue to come from India.
All right. Thank you.
Thank you. The last question is from the line of Abhishek from ABC Capital. Please go ahead.
Yeah, hi there. Hello, can you hear me? Hello?
Yes, sir.
Yes, Abhishek, we can hear you. Please go ahead.
Just one question. What is the team size right now, and is there any plans to increase headcount next year? And if yes, then by how much?
See, broadly, I think we have close to somewhere between 140 to 150 people in the team. So approximately about 150. And we continue to grow the team organically. So opportunistically, like wherever we have access to talent, like we continue to do that. And like it's going to be like an organic growth. So we don't have like any kind of like a super formalized plan. Like we see the gaps, and based on those gaps, we continue to fill those gaps both in our technology team and our marketing sales as well as the operations team.
So no significant increase in the employee cost next year.
So again, like it's a question of like so we continue to operate in like startup mode, like where obviously like wherever we find talent, so we are like happy to kind of like entertain the talent and figure out like how they can help us. And the doors for hiring are never closed at E2E, like ever.
Thank you.
Thank you. As there are no further questions, I would now like to hand the conference over to the management for closing comment. Over to you, sir.
Sure. Thank you, everyone, for participating in this earnings call. I hope we have been able to answer your questions satisfactorily. If you have any further questions or you would like to know more about the company, please do reach out to our IR managers at Velorum Advisors. And thank you very much.
Thank you. On behalf of E2E Networks Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.